Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's edition of the Business Talk with Ajay right here on ITV Gold. This weekly show brings you all the latest that you need to know from the world of business. Weekly business stories from all over the world brings you in this show, and which is made possible by SAI CPA Services, a complete professional full-fledged accounting firm located in the state of New Jersey. I should say multiple locations in the state of New Jersey, but wherever you are, you can reach them by just calling 908-380-6876, 908-380-6876, or visit saicpaservices.com for your personal taxes, professional, means corporate taxes, or any bookkeeping related matter, payroll services, or even for a small business you want to have a virtual CEO, CFO. SAI CPA Services can make it all possible for you. Their on-hand experience and knowledgeable CPAs will help you with any tax related problem. Remember, SAI CPA Services always believe in doing your taxes right, and we are so thankful for supporting this show, The Business Talk with Ajay on ITV Gold. With that note, I'd like to welcome Mr. Ajay right here to the show. Welcome to the show, sir.
Thank you, Sanjeevji. Thank you for the kind introduction.
You're very welcome, viewers. And of course, just like you all, I am also confused, and Ajay is also, that instead of attending India versus Australia's World Cup cricket final in Ahmedabad, we are here in New Jersey ITV studio bringing the show for you. But Ajay says the show must go on. We can watch the game later on. So we are here.
Absolutely. So the game is important. And it's a World Cup. It's once in a lifetime opportunity. But the show must go on.
The show must go on. All right. So with that note, let's begin these stories today. And oh boy, US and federal government. So now, next month in December, Fed is scheduled to review the interest rate situation. When I say review, that means whether they're going to increase it or not increase it, that's what they're going to decide. But they probably will not increase it. And then with that note, Ajay will continue with that story.
Absolutely. So based on all the indications that we have, Sanjeevji, so far, federal government is not going to increase the rate. So the rate increase we are expecting is done. Going forward, we'll see a situation when the rates are not increased or the rates are going down. We don't expect the rates to be going down immediately. The expectation is next year in 2024, we'll see 4 rate decreases. It will take a couple of years before the rate comes down to where the rates used to be, where the rate should be. It's a slow increase, and at the same time it's a slow decrease. All the indications like inflation is slowing down, it's not increasing. Even though it's still high, the inflation, the core index is 3.7%. Federal government wants it to come down to below 2%. So we are still almost double of what it should be. So the rates are not going to be coming down immediately. We expect the rate cycle to take at least 18 months before it becomes normal, before it comes down. That being said, you will see the housing market remaining high in next summer. The real price down is going to be in the summer of 2025. Again, it's an 18-month cycle. It's not something that happens immediately.
That is the tough time Fed is going to have to decide, okay, inflation is coming down, and they're going to look at it, next 2-3 quarters. They're going to look at the forecast to see how inflation is going to go down. But at the same time, if they risk on increasing interest rates, it's going to have a ripple effect on the credit card rates, on mortgage rates, and everything else. So whether to do it or not. Second thing is, by then, we're going to be entering into the winter time. In winter time, business is already slow anyway, right? So they're going to have a very, very tough time to see what to do. But indications are that they might skip it and they may not increase the rate. But let's see what happens. And according to Austin Goolsbee, who is the president of Federal Reserve Bank of Chicago, says that golden path, quote unquote, golden path of a huge drop in inflation without a recession is still possible. That is a little better news.
That's a great news. It may not happen though. It's too much to expect. But the chairman of Federal Reserve saying this thing is a big deal by itself. But what it means is they may substantially decrease the rate suddenly. If you remember, the rate increase has always been 0.25% or 0.5% max. And that's how it typically happens. When the rate starts decreasing, typically it's 0.25% or 50 basis point max. This indication that the rate can go down substantially, the golden path quote unquote, is a big deal. Or saying this implies that the rates are not going to be increasing in the near future.
This is not going to be easy. You know, we're saying, I mean, they also say the golden path is possible, but it's not going to be easy. Obviously, you know, some things will have to be changed, something will have to be sacrificed. So let's see, you know, what happens. Now, you know, inflation was flat in the month of October because as we monitor inflation every month, month by month, it was, you know, it was flat from the prior month according to CPI, Consumer Price Index. Now, Consumer Price Index is going to play a major role in the month of November's report and December's report. In January we will know because holiday season is
Absolutely. We are expecting Thanksgiving, we are expecting Christmas. These are the 2 months when the consumer spends a lot of money. And this year is going to be slightly different based on what we see in the inflation, based on what we see in the gas prices, based on what we see in the consumer price index. We are expecting this year for larger sale, bigger sales, just because the consumer price index have gone down slightly. The inflation is still same, at least for the month of October, as what we had in September. So we are going to be seeing larger sale, lesser spending. The stores will have larger inventory, and in order to come out ahead, they have to have bigger sales.
All right,
this
all
Thanksgiving.
right. Let's hope so. So that's a CPI. Now, going into this next 2 stories, you're going to find them a bit disappointing. And yes, nowadays, as we are into the digital age, everything is digital and everything is done on a smartphone and a smart devices. As we continue to move forward, you know, many businesses are taking a hit, and now banks are not immune to that. And here we are, Citizens Bank. They have announced Citizen Bank becomes the 5th U.S. bank to fall in the year 2023. Now, this bank is big. It's not a small bank. And the news has come out that, you know, they are wrapping out on their operation in a Citizens Bank.
Absolutely. So our viewers already know we had 4 banks failing earlier. First Republican Bank, Signature Bank, Silicon Bank, and Heartland Bank. This is the 5th bank. A couple of weeks ago, and we covered it in our last week's news as well. This is the 5th bank, Citizens Bank. And if you remember, Citizens Bank acquired Investors Bank a few months ago. So Citizens Bank, the big bank, including the Investor Bank, has filed with the state that they cannot cover their debt coverage ratio. What it means is the loans that they have given are far more than the assets that they are carrying on their books, and they are not able to make the 2 link together. So their exposure, their risk is too high. Now the state has taken over the bank. Your money is still safe. If you bank with Citizens Bank, you have nothing to worry about. At least up to $250,000 per account is FDIC insured. Bank officials have come out and disclosed it that even if you have more than $250,000, you are still going to get the money. But the fact remains, it's the 5th bank in last couple of years, in last year or so, that has failed in US.
Okay. As you mentioned, the 5th bank this year to fail in. So far, you know, the year is not even over yet. Let's bring in this interesting scenario. The number of physical bank branches in the US has seen a steadily decline from near 100,000 in 2019 to less than 80,000 today.
Absolutely. So over last 10 years, give or take, 20,000 physical brick and mortar branches have been closed. And that's a big number.
Of course, and the reason is attributed, as I mentioned earlier, increased investments in online platforms and smartphone apps by S&P Global Market Intelligence data. So this is
that's the routine. You will see in the next 10 years more physical branch to be going away, to be closing down. Bank is a business by itself. It's very difficult for the banks to compete among each other. It's very difficult for the banks to keep a branch open, to pay the salary, to pay the rent, to keep that structure secure. It's a lot of expense for the bank. And when you see a lot of banks failing left and right, I mean, last 1 year, 5th bank failed, Citizens Bank. Who could think about it?
Yep.
It's billions of dollars in the asset, and the banks are failing. They have to look back. Say, for example, Citigroup. They have been thinking about cutting the staff. Citigroup chairman said,
Jane Fraser.
Yes, Jane Fraser, that they will be cutting 10% of the staff.
Yep.
And the layoffs are going to be higher in the executive and the management position. And why are they doing it? To make sure they are not the next Citizens Bank. They are making sure they can manage their expenses, manage the bottom line, and still stay ahead of the curve, still survive.
Exactly.
And don't be surprised if you see more physical branches to be closing down.
Yep, this is going to be happening, and this Citibank, they have named this reorganization plan. They have named it as Project Bora Bora.
Absolutely.
All right, so this is what's happening. And listen, managers and consultants, working on a project have discussed job cuts at least 10% in several major businesses. If this is what the situation is now, I don't know, come 2024, 2025, this is going to change drastically. Everything is just going to be online.
I think it's like anything else. The banks have to reinvent themselves.
But what can they do? What can they change?
The service model, by having a physical branch on every corner of the street, is not going to work anymore. They have to have new products. They have to have a web presence. They have to have probably texting feature. A lot of websites have, as soon as you go on their website, the chat box start. The banks do not have that yet, for the security reasons. So they have to reinvent the technology. They have to depend heavily on the technology to cut the expenses in terms of staff expenses, in terms of brick and mortar branches, in terms of having the new product. It's very, very competitive.
Okay, that's a good suggestion. These are good points. So what we're going to do is what Ajay mentioned, what banks should do, reinvent themselves. We're going to pass those messages to the banking institutions, and for that we're going to take a break.
I'm sure they're already thinking about it.
Okay, that's good. So they're thinking about it. We're just going to pass this message. We're going to remind them. So for that we need to take a short break. When we come back after these messages, we'll have more business stories for you. Stay with us. Welcome back to the second half of the Business Talk with Ajay right here on ITV Gold. In case if you have just found us by switching channels, welcome to the long and big list of viewers of this show, the Business Talk with Ajay on ITV Gold. The weekly show brings you all the latest stories that you need to know from the world of business, maybe some that you know or maybe some that you missed. So we put together those stories that might be of your interest, and we cover as many stories possible. So the show is brought to you by SAI CPA Services, a full-fledged complete accounting firm in the state of New Jersey, but they've been helping clients all over the country. And to take a step forward, even if you have any question about your properties in India, bank account in India, and if you need to have a consultation for that, which is very, very important, SAI CPA Services can definitely make that possible for you. You can set up an appointment by calling 908-380-6876 or visit their website saicpaservices.com. Having a bank account in India and also having property in India, how does that affect in the US tax form? It's very important, and you should really know it. If you have neglected it till now, don't neglect it. Get on the phone, call SAI CPA Services and let them know that you need an advice. An expert will advise you on that matter. With that note, let's move on and let's bring in this story. This has been happening, and I've been hearing on the radio and then also watching it in the news on TV. Self-checkout counters at major stores, major retailers like Walmart and Costco and other companies, they are thinking it. But that's a story, Ajay, we're going to go into it. But nowadays, what I have noticed that you go to pharmacy, you go to other stores, even I went to Home Depot last week, right? They started to lock the items over $150, $200. And not only that, but let's say I bought one of the things, right? And the guy said, okay, it was locked, and they opened it. I saw it. I said, yes, I want it. They said, okay, you can't just take it. We'll have to take this for you to the counter. And they go to the counter in a special area, and that's when I paid.
Absolutely.
So they make sure that the customer does not have hands on that product because
until you pay for it.
Until you pay for it, because of theft.
Absolutely. It's a big problem. And if you take a step back, Sanjeevji, 3 years ago, everybody wanted to go into self-checkout. Yeah. After the COVID situation, a lot of new retailers, smaller retailers, came out. Home Depot, Costco, Walmart, everybody has these self-checkouts. Just in 2022, it's an estimate that $112 billion were lost in theft in these stores. Yep. And what kind of theft happens? What are they really stealing? Are the expensive items. Nobody wants to steal a bag of rice.
That's why I say expensive items.
So that's why they are keeping these expensive items into locked places, A lot of times, a lot of places are removing the self-checkout. So they are rethinking this whole self-checkout plan if it really makes sense. A lot of theft is going on. A lot of people are sort of not paying. Buy 3 things, pay for 1.
Yeah.
Sometimes genuinely they forget, and that's okay. If they forget, the stores are keeping enough margin to have 1%, 2%, 3% of the coverage for the theft. But when you see on an industry basis, $112 billion, that's a huge number. That's why a lot of these retailers cannot survive anymore.
Yes.
Just because the theft that they have is not helping. That's why they cannot pay the
This
salary.
is becoming a serious problem. And if you remember,
in
the
certain
state of,
areas,
in the state of California, thieves are allowed to take up to certain amount of items without paying from the store. We see videos.
And
we
there's
see
no
it in the news.
FIR.
Yeah, you can't stop them.
And once you allow in one area, once
Yes.
it becomes common in one area, that's when it spills over to other areas, and that's when it becomes a problem. That's why a lot of stores are closing down completely in that reason.
Yep.
They don't want to have a franchise in San Francisco anymore.
So here's the thing, AJ, is that obviously stores are taking precautions. They are not having their self checkout counters at many, so on and so forth, right? Everything is going online. You can buy online and so on. But even if you buy online and have it delivered to your house, what's a guarantee that the package will be there when you come home in the evening?
You are right. But look at it from the retailer's perspective. They are only shipping you because you have paid them the money.
Correct.
And if you have a situation where the packet is not received, they always have some sort of insurance.
No, what I'm
problem.
trying to say is that theft issue is
well,
becoming bigger
that's
and
always
bigger.
there.
Yes,
was
it's
the-
becoming very serious
It
matter.
happens when the economy is stressed, when
Yeah.
the economy is down, a lot of people cannot make the ends meet.
Listen, economy is okay. There are jobs out there. Unemployment rate is historically low.
Historically
People
low.
just don't want to work. They find these easy ways to get the packages and sell them and whatnot. But anyway, folks, when you go to one of the retailers and when you see self-checkout counter closed, don't be surprised.
Yep.
Recently, just a couple of days ago, there was a red cup day at Starbucks. Now, obviously, you would think that's a happy moment and happy day. No, no, no. It was not a happy moment. Starbucks Workers United, the union representing organized stores, has called for a strike at about 100 Starbucks stores across America for the next 3 days.
Absolutely. So if you remember, we covered it in one of our earlier episodes. Starbucks have closed 61 stores just this year alone in US. So all these stores that are being closed, the employees from these stores, they lose their job. So they are joining the union. Union is making sure the other stores are not closed. The Starbucks is closing the stores because some of these stores are not just profitable enough. So they have to make sure they can look at the bottom line, make sure they can make the ends meet. But the union is pitching in now and having some demands about not having the stores closed, having the increase in salary. The other related news that we are talking about as having minimum wages to be $20 in California.
Yes.
We talked about it
We
last week
talked
as
about a couple
well.
of weeks ago,
In
yes.
New Jersey is currently 15. If California does it, all other states have to follow the suit.
Correct.
And then soon enough, if you have to pay $20 of minimum wages per hour, either you increase the price substantially or you close the door.
Okay, that's happening now. Talk about strike. Let's just bring in a little bit update on a strike. Recently, actors strike. It came to a conclusion. They reached tentative agreement. Everything was okay. But those actors and the writers and everybody, they wanted a piece of pie. For whatever. Nowadays, OTT platform is very popular. So for any show or any movie, when it goes on OTT, till now, actors and screenwriters and the entire team, production, they were not getting any share of it. But now they have reached the agreement. They will be getting a share.
And it's only fair. Think about it. A lot of movies now in these days, Sanjeevji, they don't even go to theater.
Yep.
They come to these OTT platform, Netflix, Amazon, Disney directly.
Correct.
Right after production. So not having any cut for these actors wasn't fair. So I'm glad they reached an agreement where they have some share and they have a fair wages.
All right. And you think you have enough of chocolates and haven't had any news from the world of chocolate? Here it is. Mars, the American candy company, has agreed to acquire Hotel Chocolate Group, a British high-end chocolate seller, for 534 million euros. That means about $662 million. Chocolate industry is big.
Absolutely,
They make
absolutely.
good money.
So think about it, $661 million for a chocolate company.
662. Don't give them a discount of $1 million.
Absolutely. So it's amazing when it comes to these luxury products. And who buys chocolate? People who have enough money for buying the food.
Valentine's Day.
Absolutely.
Mother's
Absolutely.
Day.
So chocolate has large margin, higher margin.
Yeah.
You cannot sell rice on a higher margin because it's a necessity. Everybody has to buy it. So it's very, very competitive market when it comes to the rice, chapatis,
Yes.
flour.
Yes.
When it comes to chocolate or luxury items, the margins are absurd. That's why the prices are higher.
Interesting. All right. Now, viewers, I have a question for you before we bring this story. How many of you drive Toyota? Oh, I see everyone's hands up, Ajay. That's very
Absolutely.
interesting. Starting from 2025, Toyota cars will be hybrid.
So that's for Toyota Camry.
Yes.
Toyota Camry is the most loved vehicle in this country.
It is.
Starting 2025, Toyota Camry will only be a hybrid car, not a two-wheeler. It's going to be a four-wheeler hybrid car. And their first model has just been released
Yes.
as a hybrid car just recently, last week only.
Yep. The company is aiming to reduce its carbon footprint and meet the growing demand for eco-friendly vehicles.
Absolutely. And these are the situations that set the precedent that every other company has to follow.
Every other company has to follow. Let's see what happens. I mean, obviously, listen, you know, when EV cars share is really going, when I say share, meaning not the stock price, I'm talking about overall their presence, overall their market share in the country is going up by numbers because a lot of people are buying EV vehicles, and all these major auto manufacturers, whether US or the international ones, they're coming out with beautiful EV models, right? At the time we were saying that now it's going to be all EV, but what about the cars which is already manufactured till now? And once they stop manufacturing these cars, the engine cars, right? What's going to happen to the industry? Because they've got huge facilities everywhere. Hundreds of thousands of employees are working.
They have to reinvent themselves. They have,
just like banks.
Absolutely. See, when the computer came in or the calculator came in, a lot of people thought people who worked on the spreadsheet, people who worked on those typewriters, all those people will be out of business, will not have a job. So we don't see the typewriter anymore. We have calculator, we have computer. So people had to relearn new skill. People have to reinvent themselves how they do things.
I have an idea. I'm going to buy a scooter for myself.
Absolutely.
And I'll be riding scooter.
That's a wonderful idea, Sanjeev. Let's go about it.
All right, here comes the best news of this episode, and that has to do with World Cup Cricket 2023. Ladies and gentlemen, here we are, the final game to go. India's record is 10-0. All right, perfect record, and so they beat New Zealand in semi-final 1. Then there was a semi-final 2 between Australia and South Africa, where Australia barely beat South Africa by 3 wickets. It was a great game, though.
Absolutely.
It was a very, very great, very close game, but Australia managed to win. So now India and Australia, they're going to be competing against each other Sunday, November 19th in Ahmedabad, and all stakes are high for India. Let's see what happens.
Absolutely. So India won 10 of their last matches,
Yes.
10 out of 10. Australia has won last few matches. They initially struggled, but their batting line is pretty good.
Yes.
But once you get 3 or 4 rounds, then they sort of start struggling. The India is doing very well. India is playing with 6 batsmen now. So that's a good thing.
So
Now they
let's see
have
what happens.
deep batting line.
Yes,
and the Indian bowlers are doing phenomenal.
Exactly. And quickly, I want to add one story. Virat Kohli hit 50th century. He broke Sachin Tendulkar's record. Sachin Tendulkar was very, very happy, and he accepted it with grace. And that is so nice. And he congratulated Virat Kohli and his wife Anushka Sharma also. So it was nice to see Virat Kohli breaking Sachin Tendulkar's record at Wankhede Stadium in Mumbai.
Absolutely.
Sachin was happy. Ladies and gentlemen, we also have a Sachin in our production team in ITV Gold. He's also very happy that his record, he's relieved now.
50th century in ODI is a big deal.
There you go. With that note, we come to an end of the Business Talk with Ajay on ITV Gold. Ajay, once again, thank you so very much for your time.
Thank you.
Hope to see you next week.
Absolutely.
Until we meet again, I am Sanjeev Pandya, wishing you all happy cricket watching days, and do take care of yourself. So long.